right, it's this week's Money Minutes. Ryan Payne, Courtney Dominguez. Here we are, Union Square. We're winding down summer. I mean, just magical time here in New York City. And what we want to talk about today is, if you're watching any of the financial news, the media, all you hear about is how the Fed has lowered interest rates. And you might be thinking to yourself, like, first off, that means nothing to me.
Yep.
It's voodoo. But we want to talk about, how does that affect you? And there are ways for you to take advantage of that, or are there things that are disadvantaging you now because interest rates have gone even lower?
All right, so let's start with what this really means. So when the Federal Reserve is lowering interest rates, that means that the Federal Reserve is now lending money to banks at a lower rate. So what that means for you is you are also now able to borrow money at lower rates. So when are we borrowing money? That's things like getting a mortgage, any sort of loan that you may have, now is likely going to have a lower interest rate attached to it. So you're looking at buying a home or maybe refinancing your mortgage or getting a car loan. This is actually a benefit for you because that means rates are now lower on that loan. But sometimes you can be the lender, right?
Yes.
And that can be a negative thing for you. And how does that happen?
Yeah, so exactly right. So believe it or not, when you put your money in a savings account at the bank, you are lending money to that bank. Interest rates are very, very low, maybe like 2%, 2.5% if you found the best rate in the country. But the point is, it's not very advantageous to have your money in a savings account right now because the rates are so freaking low.
Another time that you're lending money is when you buy a bond. And if you guys aren't familiar with bonds, check out our other videos because we go into detail about what bonds are and what those interest rates are attached to them and how they can benefit you. So what does that mean for us then? Should we still be going into bonds? Are there other places that are attractive? What does that really mean at the end of the day?
Yeah, exactly. So what it means to you is you're getting a lousy rate of return on your money. And if you're putting money into a savings account because it's savings, because you want to grow it long term, you're in a bad situation right now because the Fed has continually lowered interest rates. So now you're getting that 2% rate or maybe less. You're paying taxes on that money and you're not keeping abreast of the cost of living, which we've talked about in some of our earlier videos, which you can check out. We talk a lot about stocks right now. Stocks are paying some really nice dividends or yields, anywhere between 3-4%. If you go over to Europe, 5-6%. These are great returns that you can get long-term on your money to get it to grow. And you might think to yourself, okay, that sounds great, but the stock market is a very nerve-wracking place to invest my money right now. There's things like trade wars going on, rumor has it.
Yep.
I've heard that on the news recently.
Once or twice.
And it might just seem very daunting, but the reality of it is there's a lot of great opportunities right now to generate income and to do it with moderate risk, not high risk. And if you're thinking to yourself, like, I need to get my money to work, I need to get a savings plan in place, the good news is we do complimentary financial reviews every week. We can help you put together that game plan and make sure your money's growing much faster than sitting in a savings account. So if you email us, moneyminutes@paynecm.com, put the header of this video, you can see if you qualify for one of those complimentary financial reviews.
And if you like our content and find this helpful, subscribe below so you can stay up to date on all of our weekly content. Please pass this along to any of your friends or family who you think may be interested in our content. And as always,
Be bullish.